Hello and welcome to the Trading with Web RDD channel. Today is Wednesday, the 8th of October. Yesterday was another winning day for us, and congratulations if you were able to enter the market at the right places. On the 1-hour chart, we had created 3 buying zones and 1 selling zone. As we explained during the London session, after touching below the 20 exponential moving average on the 1-hour chart, the price just reached our buy zone. After grabbing liquidity, the 20 EMA, the price started moving rapidly upward with strong momentum. You can clearly see an VAB on liquidity, that liquidity grab on the 4-hour chart. In this kind of situation, it's always a good idea to drop to the lower time frames for more precise entries. On the lower time frame, you can notice that the price created 2 great opportunities for us to enter the market. We didn't enter the market immediately when it touched the buy zone. Instead, we waited patiently until the market created fair value gaps and pulled back to fill those gaps. That's the smart and more reliable way to trade. The first fair value gap occurred just after the price touched and grabbed liquidity from the buy zone. That was only a very small touch, and most traders were not able to enter the market at that moment. But shortly after, a very clear fair value gap formed with an engulfing candle, and a couple of 15-minute candles later, the price came back to fill that gap. That was the perfect first opportunity to enter the market. Once the gap was filled and a bullish candle appeared, you could enter confidently. The target for take profit should have been above the sell zone. That trade gave around 2,400 pips, a very strong move and an excellent setup. During the New York session, another black occurred, as mentioned in our previous chart analysis. If the price closes above the sell zone, that same zone will start acting as a buy zone. And that's exactly what happened. The price pulled back and then moved sharply upward again. So on the 15-minute chart, you can notice 2 fair value gaps, one small and one very clear, both creating excellent opportunities. In both cases, the candles form nice wicks, grabbing liquidity before continuing upward. These are the perfect setups to enter after liquidity is taken. I was able to enter the market at that moment because I knew gold was in a strong bullish rally. If you had any doubt, you could have waited for the next fair value gap and entered after a strong formation candle appeared. A strong confirmation candle. That would have been a perfect, confident entry in Alfred. The price is still moving upward, and I expect it could touch the 4,000 zone soon. It's already produced more than 2,100 pips, which is an excellent result. Overall, it was a perfect setup and a really good trading day. Now let's dive into today's market. I'm switching to the 4-hour chart to identify new buying and selling opportunities. Before drawing anything new, I'll remove all of yesterday's setups to start fresh. Yesterday, we had 3 strong buy zones. For now, I'll also hide the exponential moving averages to make the chart clearer. Looking at the 4-hour chart, I'm checking for any key support or resistance zones, but I can't see any major pullbacks or rejections yet. Therefore, there are no strong support or resistance levels to mark right now. So I'll keep the setup simple and focus on drawing new buy, and sell zones instead. As I mentioned, this is a very bullish market, and We should mainly look for buying opportunities because selling at high points is very risky. I'm going to draw our first buy zone as we did yesterday, and you can see that the price nearly touched it. Even though it didn't touch perfectly, it's still a valid zone. If the price comes back down again, good honmina, and we could have another opportunity to buy. After that small pullback, a big 4-hour candle appeared, creating another potential buy area. This is another good zone to mark, and we can fine tune it using the 1-hour chart for more accuracy. If you look closely, you can narrow this zone around the big candle area, roughly between 39.41 and 39.51. That's a strong level. You can also adjust it slightly higher to the 39.661 to 39.76 range, 39.76 range, because as that's where strong upward movements occurred. These are the two main buy zones I'm watching for today. Additionally, you could mark one more small zone below that area, but I don't expect the price to reach it today. I'm not planning to draw any sell zones right now, but if the price breaks below the main buy zones, we can treat those as potential sell zones, similar to what we did yesterday. For now, these 3 buy zones are my main focus in today's market. Now, let's move to the 1-hour chart to make small adjustments if needed. This is our first buy zone, and I plan to keep the same setup and area as we used on the 4-hour chart for today's analysis. Same as before, I would like to keep that area because it is not a large zone. So this will be the third area that we are using. Okay, these are the 3 buy zones we have created using the 4-hour chart, and I would like to keep them the same without making any changes in this area. Okay, now I'm going to show you what kind of setups we can expect today. The market looks very clear and structured at the moment. You can see the 20 exponential moving average on the 4-hour chart is moving very close to the price action. Each time the price touches and closes near this EMA, it tends to move upward afterward. Recently, we saw another small pullback, and if the price comes down again to that level, we might see another reaction after grabbing liquidity below that area. Okay, also, I would like to highlight once again that the 20 exponential moving average on the 4-hour chart plays a very important role because it is closing around the 39.50 area. If the price comes down there, I expect some consolidation to happen, and after that, we could see another strong movement as the market builds momentum. Usually, when the price comes down to this area, it tends to consolidate for almost 24 hours before making a big move upward. So we might see a similar pattern again today or later this week. Now, let's take a look at the best possible setups to enter the market. You can see that if the price comes down again, we can look for entry opportunities after the liquidity grab below the key levels. That's very important. This will be our first buying setup. If the price comes down and grabs liquidity below the 20 exponential moving average, then we can look for confirmation on the 15-minute chart with the appearance of a fair value gap. Once that is confirmed, your first take profit can be placed around the recent high, and you can hold your order as it continues moving upward, taking profits using Fibonacci extensions. Okay, that's our first setup. If the price goes further down, you can enter the market again from the lower zone. In that case, wait until the price grabs liquidity below the 50 exponential moving average on the 1-hour chart, and then confirm the entry with a 15-minute bullish candle. Your first take profit should be at the 20 EMA, and the second one can be placed around the sell zone if it forms. Okay, these are the two best possible setups for now on the 1-hour chart. After switching back to the 4-hour chart, you can see that this setup aligns nicely with the 20 exponential moving average, which makes it a very strong and reliable setup if it occurs today. However, sometimes it may take a bit longer to form, maybe later this week or early next week, because a bigger pullback will likely happen sooner rather than later. The price needs that pullback before continuing its move toward the 4,000 level. On the daily chart, you can also see some consolidation happening during the middle of each week. For example, during the previous weeks, we saw consolidation on Tuesday and Wednesday, especially after two strong bullish days. Today, the market still looks bullish compared to the last couple of weeks, but sometimes we can expect a short pullback during the London session. That kind of movement is quite normal for gold. Okay, thank you very much for watching my daily forecast today. If you were able to learn something new or get some useful insights from this video, please subscribe to my channel and leave a comment below. Your support really helps me to create more of these kinds of videos in the future. Thank you very much, and see you tomorrow.